Hey guys, Nathan here from Buyers Club. We're looking at Wagga Wagga today. This is a really big market that's getting a lot of investor attention right now. So I want to break down why that is and take you through a few of the highlights from our recent report on the market. Starting with house price history, first of all, Wagga is still under 700K. So compared to some other markets in regional New South Wales, it is a little bit more on the premium side. But of course, compared to most capital city markets around the country, this is still a very affordable town. You can see that over the long run, prices haven't really seen any contraction since 2010. And growth has really been very stable for most of the history here. Prices have now more than doubled since 2010, where they were previously back below 300K. Like with a lot of markets, though, you do see very different phases of growth here. First being sort of up until 2021, where growth was quite low each year, but also really impressively stable. And then post 2021, where the pace of growth has significantly picked up. And you can see this really clearly as well if we take a look at our price momentum chart. So this one is measuring both a 3 monthly or quarterly average of monthly price growth in the yellow, and then a rolling 12-month average for monthly growth in the gray. And as I said, it really is impressive just how stable growth has been in Wagga over the long term. You can see that at no point in this chart has either measure of growth here dipped below zero, which is actually quite rare to see. And as I was saying, you can see this sudden explosion of growth around 2021, where the quarterly average hit almost 2% monthly growth, which is really incredible. So it's not particularly surprising that the market couldn't sustain that for very long. Wagga has since fallen back into a steadier level of growth now, averaging out to about 0.5% growth each month, which is roughly 6% annually. But as we'll see, short-term market conditions are definitely starting to tighten again. We'll start with days on market, which over the last year fell substantially from 60 days on market down to just 30 days in September last year, and now seems to have settled at around 40 days on market, which is a level that really indicates some intense demand side pressure in Wagga at the moment. Similarly, inventory has really taken a hit towards the end of last year, down to almost half a month of listings on the market. Meaning, if there were no new listings added in the current market within current conditions, it would take only about 15 days or half a month for every available property to be removed from the market to be sold. Next, this one is a bit more structural, but we're measuring here how many of New South Wales property sales are taking place in Wagga over time, what share is taking place in Wagga over time. And what stands out, of course, is the clear upward trend. So we can see that Wagga is becoming definitely a more prominent market over time relative to the rest of the state. And even more interesting is that sales over the past year have consistently been coming in above that long-term trend line. Now, this is obviously a measure of market liquidity. Higher liquidity on its own doesn't automatically mean that prices will grow. A market can definitely be active without necessarily rising. But in a market like this that is already showing some signs of tightening elsewhere, where demand is seeing an increase, higher liquidity can then become supportive because more sales taking place means that we have more valuation data and more recent comparable sales available, which in turn means that valuations can adjust faster. When valuations adjust more quickly, it means that price growth can flow through the market more efficiently. So liquidity on its own doesn't set the direction of the market, but it can amplify the direction that's already in place. And for Wagga's case, this does seem to be an already tightening market. So this can be a really strong sign for growth and for positive sentiment in the market moving forward. Looking at the industrial composition as well, it does look to be quite a structurally resilient economy. There is a fairly low dependence here upon industries that can be more exposed to economic shocks like agriculture or mining, for example. And it's been important to be aware of the major Defence Force presence in Wagga as well, with both the RAF base and the Army training base at Kapuka, both extremely important military hubs nationally that are also set to receive lots of further investment in the coming years. And this is also a great marker for the long term risk profile of the market here, given that there is such a large and such a growing source of government backed employment in the region. We see as well here that Wagga has been quite an affluent market for its price point. These figures in this chart are taken from the last census in 2021, but you can see that on the y axis here, the ABS had assigned quite a high socioeconomic score for Wagga. And it's a particularly high score if you compare it to markets with a similar house price level on the horizontal axis here. Of course, it'll be great to see what the latest figures from this year's census will be, but already it looks to be a market with some excellent market conditions beginning to take shape and a really strong long-term risk profile, both from a demographic and an economic perspective. That's a few of the highlights from this report, though. Please let us know your thoughts, and we'll see you back for the next market soon. Thanks.